Hi there, Renee H. Jurgensen from Coinvance. In this video series here, we're going to talk about how to invest in crypto and actually how to become successful. And here we're at my third step. The third step to becoming successful in your crypto investing is to understand the crypto market cycles. First, of course, now with the EFTs and Bitcoin going mainstream, crypto now becoming more and more mainstream, we also have to understand that the crypto markets actually interact with the overall macro markets. So if we look at the macro cycles, they're about 10 years, 8 to 10 years give and take. So we will have about we'll have a upswing, we'll have a boom for about 7 to 10 years, and then there will be a bust, there will be a correction, which lasts about 2 to 3 years. So if we look back at where we are now, 2024, we just had a correction, we just had a soft landing. Was it a recession? Germany was in red for a couple of quarters in a row. I think Canada as well. The US really kind of seemed to have managed a real soft landing and without suffering too much, but definitely for sure, we just had a correction, which was almost a recession, right? So the Fed did, I guess they have a big job on their plate there, but I guess with the soft landing, they did a pretty good job. So we just had a correction 21 to 24. So that's about the 3 years correction. So what we're looking at now, 24, and everybody's talking about macro-wise is that we're talking about rate cuts instead of rate increases. Now we're talking about rate cuts maybe in the summer, July, August. Some say we might not need it, but it is an election year, so let's see what happens. Either way, it's pretty sure that we're now at the beginning of a bull market, and that's really what makes it very interesting. But we have to understand from a fundamental level, when we want to understand the crypto market cycles, we have to start with the macro cycles because the two things actually interact. If we look at the last correction in the crypto market, it was actually in correlation with the macro cycle, which happened. We saw the beginnings of the crash. We saw some signs. What is it? November 21, I think. It was 6 November 21 that Elon Musk said he was selling stock, and there was a couple of other billionaires that were selling in November and then of 21, and then December everybody was starting to see it, and then in January, yes, there we go, there was the correction, right? So January 22, everybody saw it, and we've now been through it for about 2.5 years, and now is the time to come out of it, right? So this is really exciting times, a good time to start investing both in stocks but also especially in crypto, because we're now entering a bull market, right? But so let's look at the actual market trend in crypto. So crypto markets are a little bit different than macro, even though the two things are now connected, and we're going to have to figure out, actually this is going to be one of the most challenging thing in crypto. Predicting the market cycles is trying to understand how does the macro connection now with crypto, because we now have become mainstream with Bitcoin EFTs. We got big players like BlackRock that is gobbling up all the Bitcoin. They want to control it, of course, they want to control the market. So what kind of market conditions and what kind of market site are we going to be in the future? That's going to be one of the biggest challenges in crypto investing, and that's going to be one of the most important things for you to focus on if you want to be successful in crypto investing. But so let's go back to crypto. The crypto market size is only 4 years, so it's about half, a little less. It's 4-year cycles. This could change over time, yes, but right now we're still in 4-year cycles, and it's been that way since crypto was born because of something called the Bitcoin halving. So basically, the halving is that the people that mine, the miners that produce the Bitcoin and keep the networks going, these people are getting paid in Bitcoin, and the amount of Bitcoin they're being paid is cut in half every 4 years. That's why we say every 4 years we have a halving. And obviously, if you cut the supply, because these miners are selling their Bitcoin after they receive it, if you cut the supply, then the demand is going to go up, right? That's any market forces works like that. So that's why usually what we have during a Bitcoin halving is that we have it followed by a bull run in the crypto market. But again, everything is changing. Everything has to be fluid, right? We have to be a little bit critical and humble in our judgments here, because we don't know everything. Everything could be changing. But basically what's happening now is that we had a new all-time high for Bitcoin before the halving. It was in March, and the halving we predict is going to be sometime in April, maybe mid or end April. So this is a new situation, and this is something we need to think about when we talk about how the crypto cycles is going to work. Because what we have in the crypto market is that we will have a 3-year uptrend, and then we'll have a 1-year correction. So this is about, again, half of the macro market. The macro market is 7 to 10 years uptrend, with the bull market ending in overconsumption and euphoria. And then we have the correction, which is about 2 to 3 years in the macro market. But in crypto, because we're in a 4-year cycle, we only have a 1-year correction, and then we have a 3-year uptrend. So usually the uptrend will be 1 year of accumulation where you buy, because this is where you're buying the dip. Now you're buying cheap, you're buying low, and then you're holding on to that. You ride the 3 years up till the mid or top, try to predict the top of the bull market, and then you sell when it's high, and that's how you really reap the benefits, right? So so if we look at the last correction in the market was October 21. That's what we saw. Actually, we saw there the connection between crypto and macro. They were connected. They both saw the top and they both corrected at the same time, which was October of 2021. And then what followed 1 year after, because this is really what we see in the crypto cycle, is that it's a 1-year correction. So in October, exactly, I believe it was 21st or 22nd October, we saw a new all-time low of Bitcoin, which was 15,000. I believe it went to 15,600, 15,800. Where I actually bought. I predicted the new low. At that time, there was talk about push on the Fed. Say, hey, this is low enough. Now we need to cut the rates. Obviously, that hasn't happened yet, but already there we could see the market start to turn, because the stock market and the crypto market is ahead. They're predicting the future, right? So what we had there was a new all-time low, and we had Bitcoin 15,600, 15,800, under 16,000, and we had Solana at $8. I really enjoyed buying it at $8. Obviously, everybody knew it was going to be a contender. It's now a competitor with Ethereum. Obviously, Solana is more focused on trading, but it is definitely with its speed and with the low cost of fees for using the network, it's a real contender now. That's what we're seeing in the price, right? So predicting the new all-time low then gives you about a year where the prices are going down, and then once they hit rock bottom, this is really when we start the new cycle. This is our accumulation phases, right? So really what we can say, based on the cycles, what we can kind of predict, is that we might have we are thinking that we might have, so if we say that the beginning of the new uptrend was in October 22, so the market corrected in October 21 plus 1 year, that's October 22. That's when we had the new all-time lows in Bitcoin, Solana, everything was cheap at this level. And then you add 3 years, that's going to take us to October 25. So that would be a normal cycle. A normal cycle would mean that we would have the top. So the difference between the new all-time low and the new all-time high is 3 years. So we got the 4 years, we got 1 year correction, and we got 3 years of an uptrend. And so those 3 years, if we start from the new all-time low, October 22, we're going to get plus 3 years, we're going to get to October 25. But as I said, we don't know exactly what's happening. This time we really have a melting together with the macro cycle now, more melting together because of the EFTs and really institutional money coming into the space. Of course, that's going to create what many believe a super cycle. So many actually believe that this cycle is going to go all the way into mid 26, maybe till the end of 26. So we might have a 4-year uptrend. Others actually think that it could be a shorter cycle because we had an earlier new all-time high before the halving, and therefore that could really make it a shorter cycle. So that would mean if we have a shorter cycle, we're not going all the way to 26 to see the top. The top might actually be at the end of this year of 24 or at the very beginning of 25. So this is really, there's a margin of error here about 1.5 years, right? So this is again about timing things correctly, timing the market, and that really comes down to the next step, which is taking profits, right? So if you're trying to figure out where's the top of the market and you get that right, then you can figure out how to take profits. If you're unsure, if we don't know, is this a super cycle, is it a normal cycle, is it a short cycle, then we have to figure out to take profits before we reach the top, right? So we can start at the mid. And so this is the next video. The next video, we're going to look at how to take profits in crypto trading. Thanks.